Let's get on with it. Good morning, Kumateli Boo. How are you? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to discuss all things money. Because I love money. Money's good. Money's good. Yeah. So anyways, let's talk about money. Let's talk about money, baby. Let's talk about you and me. Let's talk about technical and fundamental analysis. I don't know. Anyways, good morning. My name is Wayne McDonald. I will be your guide on this thing we call Forex. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Yo, yo, yo. What do you want to do today, huh? Well, the markets have been closed on Friday because of observance for Easter. And then I think some of those markets are still closed. So we have one of those days that might be meh, but nonetheless, we have some pretty interesting, fundamental and seasonal trends that might be taking place. So we'll go through all of that. Yes, Guy Killer says EU bank holiday in many countries, and also I think Hong Kong is closed. Australia might be closed. So anyways, that's risk, right? Sky Killer. But you know what? The day trading group still met on Sunday evening on Easter to review our charts technically, looking for opportunities and threats. That's what we do. Even if nothing really presented itself, we looked at a lot of stuff, but most importantly, we did our jobs. So anywho, we'll go through our charts today. I think the big events are later in the week, like US CPI is on Wednesday, I believe. I mean, I can't even see the date on my watch anymore. Can you see? I don't know. I can't tell what time it is or what day it is. I need glasses. So anyways, I think it's Wednesday. I think that's about Wednesday because it comes out in the middle of the month. So we got that coming up, and I think it's getting pretty close to the third week of the month, which means earnings season's going to start soon. So very, very cool stuff going on. Also, you're probably wondering about, will Peru raise interest rates? Will South Korea raise interest rates? I think Bank of Mexico is coming up pretty soon. Will Mexico raise interest rates? So, cool. So we can prepare for all of that, technically and fundamentally. Just ask questions. Let me know how I can help. I am happy to help any way I can, really. Now, there are other ways to get help. If you look in the description below today's video, you will see a link to my book, Strategic and Tactical Forex Trading. Maybe that's your modality. You like books. Good. You got a book. Probably will help. If you prefer training videos, look at this description below. There's a link to FX Bootcamp. FX Bootcamp. Okay. There you go. And that'll get you 88 hours of training videos for $88. And they're not me babbling like I always do. They're lectures. I really should change it, right? They're training lectures, not training videos. They're really, truly lecture quality courses. $88. Super, 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 super cheap. Super cheap. I'd be shocked if you thought that those courses combined would be worth less than $1,000. Honestly. I could charge $1,000 and feel good about myself. They're $88 because I want to make it accessible to everybody. There's a link to Quant-in-a-Box. to help with your fundamentals, your macroeconomic analysis. It's AI sitting on the Google Cloud that analyzes markets all over the world and then compares, contrasts, and ranks them for you. So you could see, let's say, for example, does euro dollar tend to go up in the month of April or tend to go down based on the last 5 years of analysis and the last 20 years of analysis? Wouldn't you like to know that? And then would that be a better trade versus pound or Aussie? It's all there. It's all there, done automatically for you. You also need a foreign exchange broker. I recommend tradersway.com. They're good people. Tim says, I signed up for boot camp my third time through just your third time. But though the first time was with David Pegler. Yeah, those are great days. I have lots of fond memories of those days at FX Bootcamp. Remember, Bootcamp is now 20 years old. Amazing. So there's been a lot of resources that have built up over 20 years. And I've made them cheaper and cheaper and cheaper and cheaper and cheaper. Right, Tim? Cheaper and cheaper over the years. Why? Because I can. So Traders Way, fast, big spreads, narrow swaps, good people, above average, good looking customer service. Huh? If you open an account to Traders Way, you will become taller and thinner and funnier. Smarter. Right? Anyways, go check them out, man. Do your own due diligence. Open up a demo account. Play some trades. Check out MT4, MT5. By the way, at FX Bootcamp, you get all my chart templates included with your $88 a year. So what you could do is join FX Bootcamp, get all the templates. There's an auto installer that installs the hundreds and hundreds and hundreds and hundreds of files that you get for free at FX Bootcamp. Then go over to Traders Way, download a demo account, and then let's say download MT5, run the MT5 auto installer, install the hundreds of my templates and files that I give you for MT5, and then play some practice trades. See if they can earn your loyalty and respect. See if they can earn your loyalty and respect like they earned mine. Okay, I'm just pushing you in the right direction. Do your own due diligence. Fall in love on your own. Tradersway.com. Tradersway.com. All those links are in the description below. By the way. All right. All right. Let us start. Let's go back. Let's do the big. Let's start fresh. Start anew. By the way, did you attend Trade Non-Farm Payrolls Live that I did at FX Street on Friday? 204th month, which is almost exactly 17 years. Morning, Adam. Okay. Bouncing on support. Is that right? Wow. I'm going to do a similar search. I find it. So all I did was type in NFP 204 and it's right here. Here's the latest video, I guess, over here. Yeah, same thing. It's funny how they loop it, huh? Well, I'll pop a link for you. Guess who's back? Back again. All right. Anywho, how are you? Kiwi still quite weak. Aussie still quite weak. CAD still not getting it done. Not yet. It's trying. We had that little oil move last week. Yen just patiently waiting. It looks like nothing's really happening, huh? Like the markets are still quite quiet. And as we mentioned, many are still on holiday break. Okay, I have this set up as a bizer. A bizer. I'm going to drag this down a little bit more, catch the real body, but it won't let me. Why won't it let me? There we go. Okay, so I might focus here between the 4-hour 55 and tomorrow's buy zone. So this might actually be a little opportunity for me to the upside. Hey? Thank you. You too, Richard. What do you think about that? Drop into a fiver. Okay. Take the next up. What do you think? So now we sit here and you wait. Okay. If you're going to guesstimate, it's going to be right here. So here's a drop below 2,000, retest of 2,000. And what's happening here is you're either deciding that we are going to stay below 2,000 and we're going to make a lower low. We're on our way to, let's say, 1,900, or you're buying this dip. Sky Killer says, wouldn't it be good to get in trades today before the real market movers? I don't know. I don't really think that way. Like if you're going to be in these trades for 2 or 3 or 4 months, you know, feeling like you need to front run today to get a better position. I don't know. To me, like, yeah, you could, sure. But remember, every time you do that, what your strategy ends up being that you're trying to outsmart the market. And I think in general, that's dangerous. I'm not asking you to outsmart the market. I'm asking you to follow the market. So if the market hasn't traded yet, do you really have to get in before they've traded? Yeah, well, I wouldn't go that far. It's not bad, Sky Killer, but I am trying to make a point. So the thing is, you could, but what are your intentions? Okay, but bad. Oh, that's too strong. No. Okay. And this would be a bull waiting for technical analysis to confirm an up trade. And if you are a bull, you're trying to take it north. But on this small time frame, can you see that you're still fairly early? It's okay. Richard says, was the last swing trading course recorded? Yeah. Let me check it. Let me log into FX Bootcamp. Yeah, it's right here. April 4th.
Risky and not suitable for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never...
Oh, interesting. That's not labeled properly. What is that? I labeled the wrong one. That's your stop looking correct, huh? Oh, I see what you're saying. Yeah, the last one. Yeah, no, I was out of the office. Actually, I was traveling between. I spent a couple of days in Venice, and then I spent right on the Rialto Bridge, and then I spent a couple of days in Florence, right on the Ponte Vecchio Bridge. Then I spent a couple of days in Rome, right next to the Colosseum. Yeah, so I didn't do one last week. That's right. Sorry, I forgot. Yeah. Yeah, Maida called it. Yeah. All right, so anyways, dropping back into here. Yeah, we had a lot, the family and I had a lot of great times. One of them I really enjoyed was I rented a vintage car, a vintage convertible, and I drove it through the Tuscan countryside. We stopped at an olive orchard and a vineyard, and we had beautiful lunch with views of the rolling hills and the valley of vineyards below. It was, man, very nice. Yeah, what about the trains? The trains ended up being very Italian, so they screwed up all our reservations. But yeah, anyways, it was good. Like, I rented a private car. We get there. Nope, the private car belongs to somebody else. And then the next time they had our seats with, 3 people sitting together in a 4-seat area, and then the fourth one being somewhere else. Like, I don't know, like, they split up all our reservations, screwed them all up. It was just funny. And then yeah, I don't know. It was all funny, but nonetheless, rolling through the Italian countryside. I mean, we did a 6-hour trip on a train, we did a 4-hour trip on a train, and we did a 2-hour trip on a train. So, a beautiful way to see the countryside very quickly. And I was surprised. It was cheap. It was cheap. I was surprised, actually, how cheap Italy was. I was expecting expensive. And I know you can go expensive, and but we had a great time, and it wasn't crazy expensive. Yeah, it was a magical trip. Thank you, Maida. The whole time, here's the honest truth, right, Maida? Like, I'm having a good time. Everything's great. I'm with my wife and kids. Everything's going great. It's just exactly what you want. You're St. Mark's Square, in your Cafe Florian. Everything's great. But the whole time I'm thinking, this looks just like Havana. But Havana would be 90% cheaper. Yeah, I'm like, I'd rather go to Cuba. And there's no crowds. So you're like, okay, yeah, Italy's nice, but there's crowds everywhere. It's old and stuff, that's cool, but I can get this in Cuba. It's going to be nicer weather. Yeah, yeah. Like Maida said, and it hit me hard when you said it too, Maida, and it's point well taken. I want to go and look at the animals in the cages, right? Look at that. Is that a communist? Oh, wow, that's so crazy. But the truth is, I like to look at it as an economist, but the truth is, it's cheap. So if you want to be rich, go to Cuba. It's a good start. All right, so we got our flip right on my line. You're welcome, by the way. So here's the first test. Here's the first test right here, whether we can get through this. Because if there are bears, a bear is going to sell here, correct? Okay, so that's the real test. And as you can see, boom, immediately stopped. And now, right, it's either down, 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 or it's going to be down, up, 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 down, down, up, 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 down, down. Do I believe there'll be a global recession this year? Well, that brings up a good point. Why don't I do this now? Hang on. Remember, what I think is irrelevant. Okay? Nobody listens to me, not even you. Or my kids, or my wife for that matter. Nobody listens to Wayne. But, people have a bias against supermodels. So that's that. But anywho, what I want to do is follow what the IMF says. And the IMF has a report coming out later this week, I believe. Are they going to give me a schedule on this? April 10. So that one already came out. Wait, what's the date today? Oh, that's today! Oh my God! April 10th. I don't want the database. Hang on, go back. How fortuitous. The World Economic Outlook. Is this the one I want? World Economic Outlook? I guess so. Ooh, you could read the event replay or watch the event replay. Oh, I'm going to put that on as a challenge. The cost of fragmenting. What? That's not what I want. Fiscal monitor, chapter 2, inflation. Anyways, well, they have a weird linking policy. That's not what I want. I guess it is. Foreign direct. That's not what I want. All right, so I'm clicking on the wrong thing. Hang on. World Eco. Why is this just twice a year? Yeah. Chapter 4. I don't want chapter 4. That's not what I want. I want that. All right. Let's go back. Maybe it's under research. Sorry. I'm tired, man. I don't know why. I'm so tired. I'm slow. I need more coffee. Anyways, the IMF, I thought, has a report coming out this week. And what I care about is OPA, other people's analysis. Not their opinion, their analysis. So one of the things I would look for, and I thought it was this World Economic Outlook, but it's not. I must be having a brain fart. But anyways, it's not as clear as it used to be. But what I want to look at is a couple of things. Like I want to look at inflation, okay, and I want to look at growth. So for example, what should we do in the second half? Will there be a recession? Well, there's a bigger question than that. It's like, what does an economy like the USA, okay? So let's say the United States is expected to grow at 4.1% this year and 1% next year. Okay? Okay, so you got your base here. How does the rest of the world compare to that? Well, what if Mexico is going to grow at 4.4%? Ooh la la. Well, then maybe I have a carry trade, right? So it's growth comparatively. Remember, that's what Quant-in-a-Box is all about. Quant-in-a-Box doesn't just pull economic data from a bunch of private and government databases and give you the numbers. No, it compares them. It gathers it, organizes it, and then does comparative analysis. So it's right. So what we're looking for is the difference in growth for potential investment opportunities, right? And so anyway, so part of this IMF data, maybe I'll go back to the website. Maybe it's something here. IMF data mapper. Plot and compare country data. Okay, that's cool. More data. Okay, let's do more data. Climate change, not interested. World economic. Anyways, I'm going to have to play with this. Everything seems to be a little different than it used to be. Their linking system seems to be weird. The United States won 1.2. So what is all this map? 6% more. Anyway, so I'm going to have to play with all this stuff. So you want to do comparative analysis. So are we going to go into a global recession? Maybe, and not everywhere. And depends on your definition. Negative GDP growth. Okay. And then if so, what's the better trade? So I want you to kind of think about that, right? Global PMI are contracting. Yeah, but, I don't know. I like to look at PMI, but I don't know if I like to use PMI. I consider it more of a high frequency data where, it's not a pure economic data. It's a, survey of purchasing managers, Okay. So anyways, we're stuck here, and that's that. So you got your trade. So bears would be selling now, and bulls have already bought, and now it's binary. It either goes up or it goes down. Usman says, if there's a recession, will the price of Bitcoin drop? Well, what would you do, Usman, if you lost your job, you have no assets, and you're about to lose your house? How are you going to pay for it? You're going to have to give something up if you have no income. You're going to have to give up an asset. One, you could sell the house. Two, you could sell your cash in the bank to buy your mortgage. Okay? So I'm just saying, you trade cash to make a mortgage payment. It's the same. You're selling your cash asset, some of your cash asset, to pay for your a hard asset, which is your home. Or you have some Bitcoin. You sell some of your Bitcoin to pay for your house so you don't get thrown out in the street. So if you lose your income, you have to sell an asset, because that's all there is asset appreciation or income. If you lose your income, you have to sell an asset to pay your expenses. So if there is a recession, what does that even mean? Well, maybe lots and lots and lots and lots and lots and lots of people have lost their income, but they want to still eat every day. They still want to have shelter every day. And apparently Netflix. Okay? Okay. So think about it that way. Remember, I don't want to ever give my opinion. I want to share the logic. Okay? And so I want you to think about that. You're like, oh, good, I lost my job. I think I'll buy a whole bunch of Bitcoin. Well, maybe that's your choice. Okay? All right. All right. Been moving sideways since Thursday, because remember the markets were closed. Vulnerability, of course, is Wednesday and maybe even Friday. I think we have earnings. Let's go to Yahoo. So you can see some corporations are already reporting. Okay, I think there's going to be a lot of sensitivity to banks. So like Bank of South Carolina, I don't know anything about it. And probably nobody cared before. But now we're all hypersensitive to regional banks. And so they might report, let's say, less profits, but more interestingly, outflow of capital. That would have to be reported. And that people are going to start paying attention to that kind of stuff, huh? So what's going on? Okay, BlackRock, people are going to pay attention to. JP Morgan, people are going to pay attention to. Wells Fargo, Citigroup, PNC. You see? So Friday is going to be a big day. Oh, what about Thursday? Delta Airlines, that's interesting. Yeah, all right, so Friday. So I think Wednesday and Friday are going to be the big days. Okay. Richard says they are pricing in a zero hike from the Fed is what? I don't know what you're talking about. That doesn't make any sense. Anyways, well, why don't we take a look? Okay. So we are currently 4 3/4 to 5. 2/3 of the market believes we're going to raise interest rates. Okay. Yep. May 3rd. Yep. I would agree with that. In fact, I would suspect more than that. I'd say there's a 90% chance, but my opinion, again, doesn't matter. I would even say it's close to 100%. But anyways, okay. They're going to raise interest rates. So I'm not sure what you're talking about, Richard, when you're like, they are pricing in a zero rate hike. Who's they? Whoever they is, don't know what they're doing. Right. It's pretty, if it takes less than 10 seconds to pull up the data, then they aren't doing the work. Anyways, cool. So probably going to 5. Let's just call it 5 is the base. The low end is 5%. June. Okay. You see this? That's it. We're done. But we talked about this during the SEP. Okay? Isn't it nice to know this stuff now? To know, first of all, that you're even looking at what priced in means, but also why are investors, remember, this is not opinion. This is why, like, PMI is an opinion. This is fact. This is money in the market now, today, in real. Okay? Now, why are they positioned this way? And I'm like, oh, did you read the SEP? Now, these guys, I really, 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 really disagree with. But why? Because Powell said, okay, again, not my opinion. Powell said no cuts in 2023. And this is a cut. I suppose you could argue that, actually, I'll take it back. That's not a cut. It's not a cut. Let me show you why. These guys, okay? These guys say the Fed pauses now and stays paused. These guys say the Fed hikes and then pauses. So you go to the June meeting and nothing changes. Less than 1% say cut. So there's either a pause in May or there's a pause in June. Okay. This is where it gets wonky. This is where it gets really wonky. That for those that believe we're going to be at 5.25, you can see there is a shift this way. Okay. Now, where it's going to get complicated this year has really to do, again, with comparative analysis. If the United States goes into recession and the Fed is cutting, what is the rest of the world doing? Are they in recession too, or they have growth? Like I said, what if the United States is growing at 1%, but Mexico is growing at 4%? Okay. Does it lead to a carry trade? And if so, that moves money from the United States to Mexico, weakening the dollar. Or is the Mexican economy going to collapse, and therefore, even if there's an interest rate differential, the peso collapses? So, okay. So typically when the Fed is cutting, the USD goes up because the rest of the world is seeking safety in the US dollar. Okay? The US economy might suck, but it sucks less than the rest of the global economy. Okay? Now, it may be different this time because the dollar got strong when the Fed raised interest rates. So if they lower, then that could then lead to dollar weakness, which is not normal, but it's anyway, so we'll have to deal with that. We'll have to deal with that. It's not a normal situation. But nonetheless, by the time we get to July, there is some sort of cut priced in here. Okay, some think we'll be at 4.5. Some will think we're at 4.75. Remember, 2/3 of the market said we would be at 5%, right? 5 to 5.25. So there is a cut in here. And my problem with this is that's July. Okay, that's July. And Powell said no cuts this year. Well, there's a cut priced in. So this is already between now and July, there's discrepancy. There's inefficiency. This is where you make your money. See, efficient market theory suggests that you can never make money. You can never outsmart the market because everything is priced in. And if there's an arbitrage that presents itself, it's quickly arbitraged within seconds and then goes away. The market's so efficient that you can never beat the market. Well, if you have a slightly different version, weak theory versus strong theory and all that kind of stuff, you might say, well, most of the time that is mostly true. But some of the time it could be mostly untrue. And this might be one of those situations where efficient market theory breaks down and you say, well, Jay Powell said no cuts this year, but well, for shizzle, there's definitely a cut priced in. But he said no cuts. but a cut is priced in. So there's an opportunity. Hua? September, big meeting. And look at this, guys. 49.9% chance of a cut between now and September 20th. But he said no cut. Well, what the 73% chance of a cut? 91% chance of a cut. Okay. So anyways, so here we are between now and June, less than 1% chance of a cut. Bumpy says that sounds so confusing. No cut this year versus already cut in. Well, somebody's wrong, right, Bumpy? So you need to choose a team through careful research and analysis and pick a team. Either the Fed's wrong or the market's wrong. Well, Sky Killer, I wouldn't say, I don't know who you mean by they. There. Who are you talking about? The market or the Fed? Okay. Thank you, Neri. See, I think it's the market participants. I don't think they're old enough. I think they've grown up in a world where they say every time the economy goes into recession, the Fed cuts interest rates to save the economy. You understand that? That's what they were taught at Harvard. When I was sitting there at Harvard, we read a chapter and had a whole class discussion about the 2008 financial crisis. And it was weird. Because I'm like, dude, I was there and I traded it every single day, right? So now those guys are now running your banks and your hedge funds, right? These kids. Brilliant kids, but all they know is what they were taught in the textbook. And so what they were taught is recession means the Fed will cut interest rates. What they were not taught was, what if the Fed creates the recession? And people haven't thought that through, in my opinion. Would the Fed cut interest rates to stop the recession that the Fed created on purpose? Or would they let it fall? Aren't they supposed to kill $5 trillion? So maybe we have a 20% decline in the stock market and the Fed just stays the same. Will the Fed cut it to save it? Then what's the purpose of raising it? So I don't know. I would say a small cut next year, 2024, would be this is me now guessing. But, oh my God, a cut this year when the chairman has already said no cuts this year? I don't know. Maybe there's some inefficiency and you need to pick. Now, this is where it gets complicated. What I said earlier is we are trying to not outsmart the market, but trade with the market. So now we got to really pay extra attention to what the market's trying to do. And then we need to really pay attention to seasonality. We need to pay attention to the data, right? As the data comes in, we're hypersensitive because it seems to me much of the market is trading on hope or fear. Okay. Sky Killer says, if a cut's already priced in and they don't cut, would that make the dollar strong? Well, this is what I've taught. Okay. This way, dollar strength. This way, dollar weakness. And remember, I'm not interested in this one. Okay, I'm interested in this one. So in my quarterly outlook, I mean, I didn't bring up the Fed Watch tool. I could have. I said basically the same thing. If I'm based on my quarterly outlook, I'm really focused on this. And if there's no shift to the right anymore, then it's not a shift to the right, which means, and again, you have to go through all the training to understand this, but if not right, then not right is almost the same as potentially left. Now, someone might overdo it, but not right is very much possibly left. Anyways, easy stuff, guys. Easy peasy. It's more like, ooh, look at my gold collapse on me. Whew. So remember when I said it, guys? Hey, guys. I don't know. I sound Russian all of a sudden. Hey, guys. Right, guys? This was, if there are bulls, this is where it's going to go up. And then we were here, and I said, if there's bears, that's where the bears are going to sell. And holy smokes. Yep. So I didn't get, and of course, a bull might be in here too, right? So here's the interesting thing. There's only two places for a bull really to trade this. There's that, and then there's this. Yeah, time for some vodka, as they say. Vodka, I think, is how they say it in Brazil. Which makes me think of cachaça. Oh, yeah. It's been a while since I've had a proper caipirinha. All right, so anyways, interesting. I am thinking of pushing this back up, but it could drop $100 before I get a shot. So, yeah, patience, dude, patience. But bears sold where you'd expect them to sell. Okay, so that's that. So I'm going to have to wait a little bit. Brenty coming down. Let's do a quick glance at my oh my. I'm going to mark some tops here. There's a tiny top here, which is already reflected in the stats. There's definitely a top here. Okay. And then there's this little one here. Okay. And then let's drop into a 15er. Yeah. What do you think? Fill the gap and then go long again? Huh? What do you think? Fill that gap? I'll mark it this way. You can mark it this way, you can mark it off the bottom. I'll mark it off the gap. I have to kind of go across just to eyeball it. But it's not really a gap trade. I'm just saying this is a news event. Okay, so that surprised everybody. But then we go back to global recession, so back to demand destruction. And then we can then reinvest into supply shortages. So it's just an ebb and flow between supply and demand, supply and demand. Okay. By the way, our swing trading group planned a long right here. Okay. And you may notice that the swing trading group meets on Thursdays. And we planned out the long, which occurred on the Friday. And holy crap! Long at 66.5, and now it went to 82. Wowzer. So at some point, maybe that just, my point here is the gap forces people to take profit because it's too much money too quickly. It just freaks people out. And then maybe we just go back to this idea. So let's say a down. And then we're back to this area. So let me highlight that with a different color. Okay. And then we get back on the original game, maybe. So, right? Well, see, that's the thing. Think of the psychology of the market. So, like, you know, boot campers knew this was coming, right? And so let's say you got in here, or maybe you caught a little pullback. Your plan A was here, plan B was there, so you got that one. And so maybe you're in the second one because you missed the first one. Let's just assume you don't have the best trade. You just have a trade, which is fine. This is what we do. So you buy it here on Thursday, and then you wake up Monday morning and holy crap! Yeah, you take some profit. Because you're like, dude, I knew up, but I didn't know that up. Okay? So you take profit, take profit, take profit, take profit, take profit, and then you'd play the shortage play. So this might just be a take profit thing, or we start getting bad news out of the United States for earnings season, for example, and then you play the demand destruction, which would bring us back down to here, and then you have seasonality and then supply shortage. See, it all depends on time frame, okay? And again, in economics, we talk about long run and short run. Okay, on the short run, you can't change any variables. On the long run, you can change variables. So for example, how do you double production? Well, on the short run, you can add a night shift. But what if you're already running your factory 24 hours a day? How do you double production? Oh, you build a second factory. Oh, well, you can't build that in one day. In the long run, it might take you 3 years to build a new factory, 5 years to build a new factory. So that would be long run versus short run, because on the short run, you can't change any variables. On the long run, you can. Okay. So here's what I'm getting at. Okay. Since I'll pick on the year 2000, let's say, starting around the year 2000. society has decided to invest money. Into Facebook, Apple, so on and so on, right? Anyways, let's do all that. Okay? But they decided not to invest into oil, exploration, okay, transportation, of course, drilling, etc., right? Or refinery. Okay, so look at this. You can post pictures of your cats or how good you look in your tank top for the whole world to see. We're really good at that. Super easy, super fast. Great. But we haven't invested our capital into this stuff. So at some point, since the world is growing, now we're at that point where I think we're pretty close to peak humanity. And as people get old, I think in the next 100 years, we're going to have a human shortage, which is kind of interesting. But on the long run, guess what? As humans get smarter and smarter and smarter, they become more and more efficient because they say, how can I get a machine to do my work? We get smarter. Okay? You don't need a body like a bodybuilder. You don't need to look like a football player to succeed in society. Remember, being big and strong used to make you powerful because you were a warrior. You were a hunter. You had to work on your farm and lift things with your back and your legs and your arms. When I was in Tuscany, I had to tell the kids, like at some point, there was something like 8 million slaves in the region. Now, they weren't like shackled together. They were just, you were taken to Tuscany and you just lived in Tuscany. There was nowhere for you to go. And you just worked the fields and you lived there, whatever. But nonetheless, you weren't Roman. Okay? And boy, it was advantageous to be big. We don't live in a world like that. If you want to play football, you need to be big. If you want to play basketball, you need to be tall. You don't need muscles to work on Wall Street. Okay? So anyways, as the world becomes smarter and smarter and smarter, we find machines to do more and more stuff for us, which means you don't have to be strong. You can get a machine to do it. So what does that mean? Well, 20 years ago, India, I can't remember the number now. Let's say the average household had, I think it was 6 or 7. But let's say 5. I'm going to dumb it down. Okay? The average household in India had 5 people because it was mostly rural, agrarian society 20 years ago. Okay? Even 30 years ago for sure, right? 30 years ago, the average was probably closer to 7 because you had to have a large family working on the farm. Education was low. Technology was low. So you had to have a lot of physical labor. And by the way, physical labor tends to be better when it's stronger. So labor to the alpha wasn't how smart you were. It was how strong you were. Okay? Cool. So what I'm getting at is if your alpha says, well, because you're smarter, you're finding machines to do work for you. You don't need as many people. And so now the average household in India is dropping below, I think it's below 4 now. India's population is topped out, maxed out, or at least the rate of change has. Same thing in China. China has a decreasing population, but more and more educated, which means, right, they find more and more machines to do more and more work, which means efficiency and productivity goes up. But what's my point? Does your machine work for money? Altruism? The machine wakes itself up in the morning and says, I like humans. I want to do a good job today to make my humans happy. Or they do it for energy. It's energy. It's all energy intensive. The more and more and more people post pictures posing for Instagram, the more servers are required, the more electricity that's needed, and yet we haven't invested on that side. And by the way, having just traveled across Italy, it's now shocking how many people are standing there posing for Instagram. It's everywhere. Whether it's a selfie or your hubby taking pictures, you see people all over the place. It takes them 3 or 4 minutes to get all ready, get their hair ready, get the clothes just right, get the pose, get the light, and then click, click, click. There's supermodels everywhere. It's crazy. It's really, really funny or scary. But you can stand in a famous spot anywhere and just look left or right, and you will see somebody posing as professionally as possible for their Instagram photo. It's really, really, really amazing. But then I look at that person and I'm like, they're not investing into energy. Yeah, Cash Somnia says, welcome to the zombie apocalypse. It's really, it's both. It's sad, it's shocking, it's funny. Okay. Anyways, all of that requires energy. And on the long run, I think we have a great transition happening where we've invested too much into one thing. Okay? Although things are changing. Check this out. Dell, HP, and Apple. Okay? In Q1, they sold 40% more laptops and desktops than normal. Nope, just joking. 40% less. Whoa. Whoa, dude. Uh-oh. You think Apple stocks are going to go down today? Sky Killer says many European countries, yep, ... Yeah, for example, I know even years ago, I think during the 2008 financial crisis, a whole bunch of Portuguese families left Portugal to go to places like the UK for work. And there were no children, because the families left, to leave Portugal to work. Wherever they went, it wasn't Portugal. There was no work. So they all leave, and the schools are empty because there's no children. The young families, the young workers left. But there was an abundance of old people. And they started converting elementary schools into retirement homes. And you're like, yeah, that's a problem. Okay. So anyways, on the long run, you have to decide, okay, when are we going to move this way back to putting money here? Well, when there's a crisis. The world will always react when it's too late. And that'll happen. Eventually, we will have to get off oil. We'll focus much more on nat gas, but we'll probably move toward we'll have to move toward using uranium, for example. Go nuclear. This is what I'm looking at. Oh, where did it go? There it is. That's the one I'm looking at. Just been farting around here. So it's on my radar for one more big drop. Okay. And that's going to be an investment of based on sort of a what-if strategy. What if there is a global energy shortage in the next 10 years? Yeah, I'm looking that far out. What if oil really does skyrocket? What happens if this bottom at $2 for nat gas? I have to go further out, I think, right? Okay. So I drew this line quite a while ago. We're basically at the all-time low for nat gas. Okay. So what if we're at $15 10 years from now? What's the next step? You're going to say, oh, we're going to go solar and we're going to go wind. Is that right? Well, Tidal Wave says, get a Tesla. I am not so sure. Honestly, I'm not so sure. I think the whole world has gone all in, and that could be a massive mistake. Because now there's no plan B, right? So if you're thinking, oh, we're going to go wind and we're going to go solar because gasoline's going to be too much, because oil is too much, then guess what? Now, Lucas says solar and wind are not that efficient. No, they're not. No. But that's not my point. You're totally right. And this is part of it, but it's not my point. My point is we might explore some of that. There you go. Richard's got it. We start moving to that, trying to replace oil with something and natural gas with something. And we go with wind and solar. But I think the next consequence, partly because of EVs, but partly because of these other technologies, we run into a copper shortage. Even if you wanted to buy it, you can't get it. So now what are we going to do? What's the plan C? See, everybody has an easy plan B, but I don't think the plan B is going to work. So let's say oil goes to $250 a barrel. Okay, let's just say if that happened. Then everybody moves over to solar and wind is going to solve that problem, but it won't. It won't. So that fails. What's the next play? Nuclear. And the problem with nuclear right now is psychological, not technological. That's all we have to overcome is the psychology of nuclear. The technology is radically changed, and you're going to see like hyper growth in technology regarding nuclear energy. Hyper growth. The technology is going to double and double and double and double, like Moore's law, right? To like in the next 30 years, the amount of revolution we're going to have in nuclear is going to be crazy. But the thing is, what will change the psychology? Crisis. So, yeah. One of the things I don't know if it's part of the long-term solution. There's a lot of different technologies out there being tested and all that, but this idea, like one of the biggest challenges of building a nuclear power plant is welding. Did you guys know that? Welding. And very often what happens in the United States is the nuclear regulators come by as a new power plant's being built. They check out the welding, literally welding two pieces of steel together. And it has to be so perfect that it's almost impossible. So the regulators come out, they check the welds, and they're like, rip it down and do it again. Okay. Then it's built again. Regulators come out. Nope, still not right. Rip it down, do it again. And so you can't build a nuclear power plant in the United States on time and on budget. It's like 300% over budget, 300% longer. And Americans are just incapable of building a nuclear power plant. Now, the regulations are high, so that makes sense, though. You don't want like a hastily built nuclear power plant. But because of all of this, it doesn't get built. Now, why do the welds have to be so precise? Because a nuclear power plant under conventional technology is under pressure. 500 degrees Celsius, cooled by water. Well, water boils at 100 degrees Celsius. So 500 degrees Celsius. To keep it from turning to steam, you have to pressurize it. Now imagine water heated to a point of 500 degrees Celsius and it's still liquid. Imagine the amount of pressure. It's a giant nuclear bomb, but it's not a nuclear bomb. It's the pressure cooker bomb. It would just explode. Now, of course, now there's radiation in there, but it's not a nuclear explosion. It'd be pressure exploding, right? Anyways, with bad consequences to all that. But you can just imagine the pressure like crazy, right? So there's many new technologies being developed. One of them I find very interesting. Instead of cooling it with liquid water, remember, not steam, you have to keep the water liquid, which is pressurized. Instead, you use liquid salt. Now, how do you make salt into a liquid? You heat it up to 500 degrees Celsius. You're like, wait, what? Yeah, so you just put salt in it. The nuclear reactor, because of its natural heat that's given off, melts the salt. But now the salt stays liquid and keeps everything at 500 degrees. And so, which means it's not pressure at all. It's atmospheric pressure. And I'm like, well, that makes sense. So like one idea is if you're going to build a nuclear power plant quickly and affordably, one way to do it is find out how do you build a nuclear power plant without pressure? Oh, well, you just use salt. I'm like, that's interesting. Right? Much more interesting than like fission versus fusion and all that. You're like, whoa, whoa, whoa. But interesting nonetheless. So that's probably the way that that's going to go down in the future. Well, it's all the same. NaCl, meta, sea salt, and mineral salt, and rock salt. It's all salt. Where did the rock salt come from? Oh, it used to be an ocean floor, right? Yeah, that's the interesting thing. Yeah, it's all the same stuff. And if you have salt inland, well, that salt used to be seafloor. And then where does the sea get its salt? From the ground. It's just salt. Yeah. So it's an abundant, cheap material, right? Yeah. Yeah, well, there's different minerals and all that kind of stuff. But yeah, would you have to purify your salt so, there's pure NaCl? I don't know, but probably, maybe, right? Yeah, I would imagine you'd take out the impurities. So there'd be a process to purify your salt so it's pure NaCl. Or maybe there's certain things you want to add to it to make it even better. But there is no shortage of salt, right? And so I'm like, ooh, that's interesting. Okay. Now, my interest in Cameco isn't necessarily the play on which technology is going to succeed. Are they modular? Are they molten salt? What new technology is going to power these nuclear power plants? I don't care. It's not for me to figure out. There's too many. You'd have to pick one out of 100, maybe one out of several hundred different technologies and say, this one is going to be the future. I don't know. I don't want to bet on companies that build these things. Right now, only the South Koreans and the Russians can build a nuclear power plant, and I don't trust the Russians. And I've seen the Russian nuclear power plant in the middle of Johannesburg, and I'm like, oh my God, why would you build that in the middle of the city? And they're like, it's safe because it don't work. So I don't want the Russian nuclear power plant. I trust the South Koreans. They can build it on time and on budget. But nonetheless, I don't want to build. Is it going to be conventional technology or which new future technology? I don't know. I don't care. But it comes down to the fuel. I want to invest and own the fuel source. Cameco has a lot of the uranium, but they also own a lot of the technology that purifies uranium. In fact, I believe you have to gasify it at some point and then extrapolate through vertical separation and purify that way. So remember oil? I really hope you guys, everyone here really should take the oil course. It's so fascinating. But imagine you have a vertical separator and you add heat down here. So let me heat it up. Okay. So you heat your uranium or your oil. That's all right. And the heavy stuff stays low. Actually, let me do it this way. Okay, the heavy stuff stays low. The lighter stuff goes high. And then the lightest stuff of all goes to the top, correct? Just very basic stuff. So let me do it this way. Maybe I can separate with the black line. Oops, a little too thin. And in fact, the reason I did that is I want to add one more to our vertical separator. Now, I don't know if refining, I don't think so. I think it's a chemical reaction. No, but they still have to gasify it. But I think they gasify it through an electrical thing. But anyways, let's do it this way where it's similar to separating oil. Okay? And the lightest stuff goes to the top, you see? So if we're talking about oil, refining oil, what you get down here is tar. Oops, for example. It's easy to understand tar. Bitumen, oh, let's just say tar. Okay. And then I'll make up, how about plastic? Let's say here, I'll do diesel. And up here, I'll do jet fuel. It's very gross simplification, right? Okay. But the thing is, you heat it up and they separate. So imagine if we're talking about uranium, even after the basic process of refining, which means you're just trying to get the dirt and non-uranium stuff out. So now you get mostly uranium. It looks pure to the naked eye, but there's still stuff in it. Where then if you heat it up or use some other chemical process like adding acid or something to gasify, but at some point what will happen is you might find that the purest uranium, chemically speaking, now you're getting it to the chemical composition, the actual atoms up here. You can separate everything else. So like various types of carbon comes out, various types of sodium come out, various types of whatever, impurifications, right? Everything that's not quite uranium. Even lower grades of uranium might burn at a different level. And the best, purest, best of the best, pure uranium, whatever it is, uranium-236, I don't know what the numbers are, right? But the best one comes right off the top. And the impure stuff stays at the bottom. This is how we refine crude oil, where you put crude in. This is your WTI, which is just crude. Okay? In the basic, there's multiple times that you would do stuff like this. The first one, you're just trying to pull nat gas off the top and water off the bottom. But then when you do it again, you're pulling jet fuel off the top because it's the lightest. Okay? You just siphon it off. There's literally just a pipe here. So everything that goes up just comes off the pipe. And then you suck this off, and the cool thing is you do it again to try to get some more of this stuff out. And then it burns off, and you do it again, and maybe you get a little bit more, and then you do it again, and nothing comes out. So then you send it over here, and you have your Coke, which can be sold. 237? Yeah. So again, if you guys already know a lot of this stuff and you're expert in uranium, I just probably made a couple of mistakes and overly simplified everything. But for those that don't know anything, it's good. Remember, right? So anyways, it's the thought process of understanding all these processes. Well, what if you were investing, if you thought there was going to, in the next 25 years, there would be a nuclear revolution, and suddenly all around the world, various types of nuclear power plants were going to be built because nobody wants to pay $250 a barrel for oil. They're sick of the supply chain of nat gas and oil between countries that don't play nice together. Maybe we go into a Cold War again, and China only buys Russian oil and nobody buys American oil or whatever. And just the whole supply chain shifts, which jacks up price. So if half the oil goes from, just two countries and then the rest of the supply chain is down. So there's never quite enough oil for our expansion. So oil prices are high and like, oh my God, right? Like we can have a different world in the next 25 or 30 years. So then we shift radically to a boom, a renaissance in new technology, uranium. Well, you can invest into the builders, you can invest into the patents, you could invest into, the individual corporations, you can invest into the miners. But it turns out that this process for uranium is quite a bottleneck. There's not many companies that do it. Guess who the leader is right now? If you want fuel, let's say Bill Gates just invested $5 billion into a nuclear power plant and spent 10 years building it. Oh, wait, he did. It just got finished. Did you know that? Bill Gates' foundation invested billions and billions and billions of dollars building a brand new, state-of-the-art nuclear power plant. It took years and years and years and years and years to build. And they just opened it. And you know what the problem is? They just finished it. The problem is no fuel. The number one producer of nuclear power plant fuel is Russia. The United States outsourced its entire nuclear power plant fuel supply chain to Russia. Whoops. Wah, wah, wah. So Bill Gates is now the owner of a beautifully built, state-of-the-art nuclear power plant that they can't turn on. It's like you bought a Lamborghini, but there's no gasoline. Or in 10 years, what price do you think your brand new Tesla is going to be if in 10 years the price of lithium doubles, the price of cobalt doubles, the price of copper doubles? What's going to happen to your Tesla? The price of a Tesla? Okay. To keep it, let's say Tesla, I don't know the numbers. Let's say Tesla produces 1 million Teslas a year. I don't know if that's true. Maybe it's 2 million, but go with it. Okay. So if many of the costs double, then to keep the price of a Tesla the same, they will have to sell 2 million. Nope, that won't do it. They'll have to sell 4 million. Nope. They will have to sell 8 million Teslas a year to keep prices the same per car. So you know that $35,000 car that costs you $60,000? Remember that? Remember it's a $35,000 Tesla. And you're like, well, why did it cost me 60 grand? Good marketing. I mean, dude, he is a genius. They will have to get to 8 million cars a year to keep the cost per car. Okay, they call this marginal cost. Okay, so in microeconomics, okay, oops, let's do it this way. In microeconomics, okay, you have a demand curve and a marginal cost curve. Why? Marginal cost is equal to supply. If your costs are higher than your selling price, as a manufacturer, do you sell? Okay, your per unit cost. Okay, to build 1,000 fidget spinners, okay, you call up a factory in China. You're like, I want 1,000 fidget spinners. And they're like, okay, we can do it for $1 each. Okay, so let's talk about it. And okay, so they manufacture it, and then you can take this even further. Then you got to do marketing and advertising. You got to have employees, you got to have insurance, and then you have to sell it at a wholesale cost to a retailer. And by the time you cover all of that, the fidget spinner is $12. Okay? At $12 per unit, this is quantity and price. How many do you think you're going to sell? None. So do you do it? No. So you do some careful analysis, right? Now this turns out to be 6, so my numbers are still a little off. No one would pay $6 for a fidget spinner, but nonetheless, you got to keep it in here. So your cost, okay, your break-even cost has to be $6 or you won't produce. That's your per unit, and that's what marginal cost means, right? I don't like microeconomics, but it makes sense. All right, let's just turn the page. Let's move on.com. Okay, there's only 2 possibilities going on with peso. Bulls are buying a double bottom of a double bottom. they're predicting recession right now. And bears are taking it down off of this price here. That's why I want to look at IMF. Get some numbers on their growth projections for peso and dollar and do a comparative analysis. And look at this and think about timing. Remember, you might be stuck on a 15-minute chart. What I'm trying to teach you is that's fine and dandy after you have a strategic position. Your strategic position will be based on things like that Fed watch tool I showed you. Are we moving to the right? Or are we moving to the left? Or are we not moving to the right? So you're either a bull on this pair based on that. You're basically neutral to bearish because you're not a bull. So you can be bearish, but you're mostly neutral. Okay? Or you're even more left on the Fed watch tool, which makes you more bearish on this pair. So you have to figure out where you are on that. And not just look at a 15-minute chart and go, you're looking for patterns. Okay. So you might look at this and say, oh, look at that. I might have a selling opportunity later today or tomorrow or later this week. And that's how I'd rather you look at it. Not that you're shorting, rallies, but that you have plan A's and plan B's strategically. Okay. So the stock market did open. Yeah. Okay, NASI coming down. Go to the daily chart on this one. Okay. Perfect price for it to decline, huh? Perfect. Perfect place for a decline. Very logical market. Makes me very happy. And that's the buy the dip, baby. Okay, cool. So the next one just happens to be 4K. Okay. And if you look at, okay, this high, this low, and then this high. Okay, you can see it's a higher high. So you go here to here to here. Cool. I know, right? Right on. So the markets are open. We need to go to work. So thank you for attending today. Remember, look at all the links in the description below the video. And before you leave, would you please click the thumbs up button? I'd appreciate that. If you have questions about technical analysis and trading, how to do your own macroeconomics, or even how macroeconomics works, $88 at FX Bootcamp solves all your burning questions. If you want to know the analysis of macroeconomics and how to apply that to potential trading strategies, that would be Quant-in-a-Box. If you need a foreign exchange broker that's trustworthy, that's tradersway.com. Lots of resources, guys. Take advantage of them. Peace on earth. May the pips be with you. May our profits be above average. Cheers.